Joining us now to talk more about the big global sell-off, David Gordon. He's chairman and head of research at the Eurasia Group. Also with us, Mark Luschini, chief investment officer with Janney Montgomery Scott. And gentlemen, thank you both for joining us to discuss this big issue. David, let me begin with you. You heard our reports, China, China, China. Everybody is saying that that's what got it started, but you don't see it that way. Tell us what you think is the catalyst for this big sell-off.
Yeah, so I think that a little bit of this is bad news in China, but I think a lot of this was mounting concern in Argentina, a deteriorating political and economic situation in Turkey, huge unrest in Thailand, increasing instability in Venezuela. So I think a lot of this, the worst cases here are quite country-specific, and even on China, I think to the extent that China was the spark in the last 36 hours, I think it's overstated. I don't see the kind of severe downturn that I think some people in the markets are pricing in. A lot of this, frankly, is Davos yesterday, where there were these hostile issues around China, Japan, and I think there's a lot of groupthink, negative groupthink, and huge numbers of big players in international markets are in Davos. I think that a lot of this is a negative Davos effect.
That's a very interesting point. Mark, do you see it that way? I mean, David focuses on political uncertainties, instability in some key players. Do you see it that way, or do you see it more a sort of reverberation of a slowing Chinese economy with its strong appetite for commodities affecting some of those countries that are, in many cases, though not necessarily Turkey's case, commodity-driven?
Tyler, I think it's more the latter than the former. We know that China has been deliberately attempting to engineer a slowdown in its economy. It just happened to be in the context of global economic activity slowing over the last couple of years until recent. And as a consequence, it has already had a backlash effect on so many other emerging market countries that are today much more reliant on exporting amongst themselves, and particularly to China, than so to exporting to markets like Europe and the United States. Within that context, though, certainly some countries have specific issues, some of which were named previously by the other guests, but I don't think individually those countries are necessarily the cause for concern. This emerging market story is not new. I mean, there's a reason why last year in 2013, where you had the S&P up 32%, the EFI up 25%, and the emerging market index down 3%, that was already signaling problems in the emerging market area. I think what we basically are seeing is, after basically 2 to 3 months of economic surprises that kept mounting on each other. If you look at the Citigroup Economic Surprise Index, it's gone parabolic since November of last year, met the intersection of rich valuations, and that combination took less than perfect news to trigger the most anticipated correction that anybody's seen in about 27 months.
So, David, you just talked a moment ago about a negative Davos think. Let's bring it forward to next week and see what you think the Fed think is going to be, because a number of people have been speculating that maybe Federal Reserve policymakers looking at this big sell-off may dial back on their plans to taper back on these stimulus measures. What do you think?
You know, I think the Fed still overwhelmingly will base their decision on the dynamics internal to the U.S. economy. But I think if you do have this continuing market volatility, that will definitely have a negative impact domestically. So I very much do think we could see a little more caution on the part of the Fed policymakers, yes.
All right, quick thought, Mark. Should I get out of emerging markets right now and just let this blow over? Got about 25 seconds.
I think real quickly, emerging markets as a basket, yes. We are not constructive on emerging markets overall. We think it's going to be a much more nuanced story on a go-forward basis. We like Vietnam, we like Mexico, we like developing Europe, i.e. Poland. But in the aggregate, to hold emerging market equities, we think there could be more pain yet still to come.
All right, Mark, David, thank you both so much. We really appreciate it. Have a good weekend.